All right, so QuickBooks Online, the profit and loss report, how to generate it, how to evaluate it, and how to use it. Quick question. If I handed you your profit and loss report right now, would you actually know if your business is doing well? Or would you just kind of skim it, nod, and hope for the best? Yeah, well, you're not alone. Because here's the truth. Most people using QuickBooks Online are looking at their profit and loss completely wrong. And worse, they don't even know it. So in the next few minutes, I'm going to show you how to find it, how to generate it the right way, how to quickly tell if something is off, and how to use it, even if you're not an accountant. Let's start with one of the biggest mistakes people make. They run the profit and loss, they glance at the bottom number and go, cool, I made money. And that's it. No context, no comparison, no clue if the number is good or bad. That's like stepping on the scale once and deciding you're healthy without knowing what you weighed last week. But here's what nobody tells you. A single profit and loss report by itself, almost useless. The power comes from comparison. And we'll get there, but first, let's actually find the thing. So if you're inside QuickBooks Online, here's what you do. Go to the left sidebar, let your mouse hover over the reports icon, click Standard Reports, then click Profit and Loss. Done. That's it. But don't run it yet, because this is where most people mess up again. Here's how to generate the profit and loss report the right way. At the top of the report, you'll see the date range, which matters more than you think. If you leave it on something random, like this year, you're going to get a messy, unclear picture. Instead, be intentional. Ask yourself, do I want to see this month, last month versus this quarter versus last quarter, or this month compared to the same month last year? Because those comparisons, that's where the insight is. So here's the simple rule. Always set a specific time period before hitting Run Report. Once you do that, click Run Report. Boom. Now you've got your profit and loss. Now, don't overcomplicate this. At its core, the profit and loss is just money in minus money out equals profit. That's it. Top section income, middle section expenses, bottom net profit. Think of it like your personal bank account. Income equals your paycheck, expenses equal food, rent, Netflix, profit, what's left over. Simple. But here's where it gets interesting. You're looking for patterns. Now, how to spot problems fast, even as a bookkeeper. If you're a bookkeeper, it's not technically your job to fully analyze the profit and loss. That's usually the CPA's role. But you should be able to tell when something looks weird, like expenses suddenly doubling, income dropping for no reason, random categories showing up. That's your cue. And if you don't know what's going on, ask. Ask a CPA, ask someone more experienced, or honestly, ask AI. Because here's the thing, accounting is very rules-based, which means AI is actually pretty good at spotting inconsistencies. So there's no excuse to just ignore it. Now, let's talk about the part that actually makes this powerful. Comparisons. Here's what you should always be doing. Compare this month versus last month. Compare this quarter versus last quarter. Compare this month, this year, to the same month last year. Why? Because context changes everything. If you made $10,000 this month, that sounds great. But if last month you made $20,000, that's a problem. Same number, completely different story. This is what separates people who look at reports from people who actually understand their business. One more thing people skip. Before you send anything to a client, always check the profit and loss and the balance sheet. Quick scan, because clients will ask questions like, what is this expense? Why is this number here? And as a bookkeeper, you should understand what's on these reports. Not necessarily analyze everything, but at least explain what the categories mean, what the numbers represent, because to them, this isn't just a report, it's their business. So here's the takeaway. The profit and loss isn't complicated. People just use it wrong. If you set the right time period, compare consistently, and scan for anything unusual, you're already ahead of most people using QuickBooks. And the best part, you don't need to be a CPA to do that. You just need to pay attention. Because once you understand your numbers, you stop guessing and start making better decisions. And that's where things get interesting.